Ladies and gentlemen, Happy New Year to you all. Here is my stock portfolio. So let's find out how it performed last month. A very quick reminder, that is the target. Long-term investing. Let's build a portfolio. And we start off with the quality company section of the portfolio. Banco ZK is the largest, you can see there, 5% of the portfolio. Incredible month last month in December. So that's now in the 100% return club. We have Dropbox as the next largest company in that quality company sector. That's now hit £1,500 return, 34% over around about 3 years. That's fairly decent. Dropbox has actually pushed on as well in January, so it continues to do well in the market. And we've got Visa, which is a good company to have as the third biggest in this part of the portfolio, and that's just edging up very slowly. Into Skyworks next of all, a great month in December, and so they're starting in a good position, 18% up. Williams Sonoma, another raging month in less than a year. We are up 71 percentage points. Now, of course, with all these, this is just my portfolio, not investment advice personalised to you. But we have Google, which is a solid company, 45% in around about a year is the return on that one for me. These are all big quality companies here. Adobe, around about 50% up. Advance, around about 60% or 59 there. And then we move down to Unilever, which is hovering in that 90 to 100% range. Kelly Partners, good month, up 65 percentage points, the Australian company. But American Express has also hit the 100% total return in my portfolio for the first time, up 16 points a month, but only £600 or so. And this was the thing when I started this, the first couple of years, I wasn't getting the position sizing right, looking at the overall portfolio. So actually, I only put, £300 in to start with. So not great in retrospect, but nevertheless, a second one hitting that 100% return this month is very welcomed. Berkshire doing well over the sort of 3.5 years I've held them. And Facebook has had a decent month. And Somero, very good month, so now positive return on Somero. And last, the smallest position is InMode, which is, I think, the only one of these quality companies that is actually down. So that is the most important section of my portfolio. Well, I want those high return on capital companies. So we're on to the dividend section next. And Unum goes from strength to strength. I think probably the second biggest holding, up 137% overall. Aviva is closing in on a 50% return, a decent chunk of the portfolio. And Legal & General, very good month to take it to 20% total return. Good dividend companies. Speaking of which, we have Investec that absolutely smashed it. Over 300% return now. Good month for Investec, and on 10% dividend on cost on that one, which is very nice. Citi is getting back towards level. Probably not in my top 20, so this one may be one to consider removing. BT around about 20% up on their £400 as the holding. There has been an update on that one subsequent to the end of December. So wait until the next video to find out what's happened there. British American Tobacco, bit of a staple for UK dividend companies. And plus 500, very good month, up 24% now. Another dividend company, City of London Investment Group. Direct Line, treading water really, about level, and I've held that for quite some time. And then Duke Royalty, the smallest, up 65%. So pretty successful dividend portfolio. I'd really love to hear what your dividend portfolios look like. What companies have you got, and what companies do you like that I've got? Please share below. Now we're on to the managed section, because I could muck it up. So if I have a portion of my portfolio that's managed by others, this will protect me. So the objective is not to lose money, and this will help me not lose money. So Fundsmith now £2,000. There's a viewer that suggested reading Terry Smith's book. God, must be 18 months ago now. So glad that he did. And I've been building up that position in my portfolio ever since. I think he's excellent. And that's up 8% on that one. But 200, just edging up slowly, 44% total. And Linsell Training Equity again in that 100% club. Very good month for the FTSE 250, those sort of smaller UK companies, which is reflected in the UK Smaller Companies Fund. Also done well. US index up 6 points and pretty good on the Pacific area as well. And SP 500 again up 5 points. Now, something I want to do this year is get a lot more S&P 500 into my portfolio. It's really too small a part of the portfolio. World Index, good month for the World Index. And also on the Australia Index up 20% now. So that is the managed part of the portfolio. As we get onto the cyclical companies, which are normally sort of commodity based in the main, and coal company Alpha Met Resources. And I've been taking profit off the table as we go on this, but of course in hindsight, as is always the case, I kept it all on the table. This would be absolutely incredible, this company, but we're up over 100% in month. Brilliant, absolutely brilliant. Very happy with that. Intel also back to about level on that one. Missed a bit of an opportunity about a year ago on Intel, sort of dilly-dallied and didn't take advantage. But another coal company here, and we're getting towards 500% on that one, Ramaco. And of course, in the news, you may have seen Bitcoin done pretty well. So now back level on that, and Ethereum as well. In fact, up 18% on those very, very small positions. And then Ultrasource has not been doing well at all, but that concludes the cyclical companies. So we get on to the parts of the portfolio where they don't fit the strategy that I've now put in place, 18 months ago or so, but I already held them. So they will be sold in due course, but I think Alibaba has got a long way to go. But, down almost half on that one, and it's a big part of the portfolio. Corsair, again, around about the same sort of return. Cumulus, again, around about the same sort of return. S4 Capital, shocking, had a chance to get out of that as well. Must have been about a year ago at level when I didn't take it, so I should have done because it didn't fit the strategy, so that's a mistake. And we've got two are essentially dead in the water. But of course, I must thank the Patreon members with new member as well. If you want to discuss my portfolio, discuss your portfolio, talk about ideas, we've got a Discord server, we've got a Patreon site, this is a place to do it. But there's no financial advice given. It's all general, because of course I'm not allowed to give personalised advice. And of course, where we are with the overall piece, which is the key bit, going towards that very long-term £1 million by 2050. So we were at around about just under 46k last time, and we are now smashing it really, really good. We're now 48,500, which is the highest the portfolio has ever been. And yeah, up almost 3,000, so 2,700 there. £300 deposit, which is the minimum I put in every month. I can put more, but that's the minimum. And a performance increase of £2,412 just within the month. So it's pushing the portfolio forward. So the first big milestone, I started with 20 in 2020, and we're going to hit that first milestone hopefully at 50k this year. Now I'm very conscious of ensuring that I understand, am I ahead of target or behind target? So for that 2050, 9.61% a year. That is the run rate I need to get. So when I'm making investment decisions, buy, sell, hold, I need to, at a portfolio level, aggregate it against, is it going to help me achieve that run rate? And just to bring it all together, this is how everything looks together on one page. There's a lot of green there, which is great, but my concerns or points of interest are as follows. The big black position, that's cash or cash equivalents. That is a lot of money. It is 22% of the portfolio, too high. One needs to be reasonably close to fully invested to make the best of the market. However, I'm not going to put it in for the sake of it, but I will be chipping that away into some indexes because it will do better. And also keeping a little bit on hand to take advantage of opportunities as they arise, so I don't want to run a zero cash position. The other concerns I have, looking at that no category section on the right hand side, it's all red and it's a decent chunk of the portfolio. So there's an argument to say, do I sell it all and crystallise that position because I'm ahead of the run rate? And yeah, S&P 500 and US index, much too small, I think, for an investment portfolio or for what I want to do. And this quality section, nice and big, but I want it to be bigger. It's 29%. I want to push that towards 40 to 50% as I get companies, whilst not overpaying for them. Not necessarily get them undervalued, make sure I'm not overpaying. So we have it. That is how my 48.5 grand portfolio is distributed. On track for $1 million, still early days. Got to keep the discipline and got to keep improving. So catch you on the next video. Thanks for watching.